Good morning, and welcome to the Energy Prospectus Group webinar hosted by Solaris Resources. This event is being recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here is Dan Steffens, who will introduce today's speaker.
Hello, welcome everybody. Thanks for tuning in today. Welcome to today's webinar. It is being hosted by Solaris Resources, an exploration company that is advancing several copper and gold projects in Central and South America. Solaris Resources is a public company based in Vancouver that also has offices in Toronto. So I think it's more headquartered in Toronto now. Both of our speakers today are based in Toronto. It trades as SLS on the Toronto Stock Exchange and SLSR on the New York Stock Exchange. It is a New York Stock Exchange listed company. Most of today's presentation will focus on the company, what the company believes to be a global scale resource with high-grade copper in southeastern Ecuador, which they call the Warrantza project. Warrantza has an extensive system of outcropping copper porphyries. Porphyry copper deposits are currently the largest source of copper ore in the world. Most of the known porphyry deposits are concentrated along the Pacific Rim of Fire in western side of Central, South, and North America, and Southeast Asia and Oceania. In May, the price of copper spiked to an all-time high of $5.10 US per pound. Copper prices have pulled back recently, but they are still up 5% year over year. Joining me today is our speaker, Daniel Earl, the president and CEO of Solaris Resources. Also on today's panel is Jacqueline Wagner, VP of Investor Relations, who joined Solaris in 2019. She has over 15 years of experience implementing strategic investor relations programs for publicly traded companies. Daniel Earl has close to 18 years of experience in the mining sector and capital markets, covering projects ranging from early stage exploration through feasibility and engineering to production. In addition to being the president and CEO of Solaris Resources, he also serves on its board of directors. Prior to joining Solaris in November of 2019, he was a vice president and director of TD Securities, where he covered the mining sector for over 12 years. Daniel also sits on the board of Augusta Gold Corp, and he is a graduate of the Mineral Engineering program at the University of Toronto. So during the webinar, if you have any questions, please type them into the chat box, and we will answer them after the presentation. With that, I will now turn it over to Daniel Earl for an update on Solaris Resources. So take it away, Daniel.
Thanks so much for that introduction, and thank you everyone for your attendance. It's really a pleasure to be able to speak with you. I know we've got some returning investors, and there's probably some new potential investors in the audience as well. So I'll try and cater to both here. If there's any additional information or any questions that come up, put those in the chat and we'll try and get to those as well. I thought in terms of the structure of the presentation, we'd start with kind of a discussion on copper. I think that just, especially some of the issues around copper supply really helps frame the opportunity with Solaris. So we'll start talking about copper, and then I'll introduce this Solaris story and get into some of the details there. In terms of copper, I always like to describe this as a market that really has two drivers. So it's about sentiment, and then of course it's about the fundamentals. And the sentiment you see expressed in the spec positioning, which can really drive the market. So this is far more impactful in the copper market than it is in say the oil market, which you're more familiar with. So the sentiment really matters in copper. And we've seen some absolutely wild swings this year, where the copper price has gone from the 3s into the 5s, and now we've got basically a 50% retracement of that move. 20% correction. We're down in the low 4s, and so I'll come to that. But in terms of the fundamentals, this is really where you want to focus as an investor, and you want to take a multi-year view. When you do take that longer view, and you strip out the kind of the noise and the volatility that's driven by changes in spec positioning around sentiment, then that's when the picture really becomes very clear. And that's why I think you basically have a consensus around the idea of a strong fundamental outlook for years into the future in the copper market. Okay, and indeed the fundamentals are still very tight. They've been tight in copper for some time. They've maybe just in the very short term loosened a little bit. I think this is basically seasonal, and then it's China Inc. Kind of at work. We've seen this before in the copper market where prices get up to highs that they're uncomfortable with. We had a copper price with a 5 handle on it. That's very uncomfortable for China. They're a massive net importer. Where they come in and they take advantage of any change in kind of sentiment and pile on with some pressure to try and really help that price come down more significantly. And so what we've seen in China, if you're looking in the details of the copper market, they've been shifting units around basically from China into ex-China kind of warehouses, and that's why you see a bit of an inventory build, and it helps add to this impression that actually the market's loosening up a little bit. But this looks to me a lot like what we saw in 2021, where China is just out there trying to jawbone the markets across a range of markets, not just copper, but you see the same thing with oil, where they start talking about, they're going to be selling from their strategic stockpiles at the SRB. They start, manufacturers start talking about builds in their inventories, and they start working down those inventories and so on. And basically it's about, just working the market down without actually having to sell very much copper. So by the time it's done, you see the market impact, but you don't actually see that they've moved all that much copper. China's a market, they import about 10 million tons a year. And their strategic reserves are, only around about 2 million tons. So this is not a stockpile that they can meaningfully bring down. They can't actually sell, but they can certainly talk about selling. And that's kind of what we've seen recently, which is added pressure to this kind of positioning unwind that we've had in copper. That's why we see sort of an outside, a sharper move than you might otherwise expect in a fundamentally tight market. And you can see that tightness in the market. If you look at the concentrate market, for example, this is one of your leading indicators of the copper market, is what's happening in concentrates and what smelters are charging for the treatment of copper concentrates to make metal. And those treatment charges, they've been in the kind of the low 20s, which on its own is kind of pretty extraordinary. But then recently we've actually seen, those treatment charges go negative, which means that smelters are paying to process copper for the copper concentrate producers, the mining companies, which is a pretty amazing thing. And it speaks to how tight this market actually is on a kind of a go forward basis. So look, I think if you take a look at those fundamentals, we're going to be in deficit this year. Okay, from a pretty tight baseline in terms of inventory, even if it's loosened very slightly recently, still pretty tight inventory position, and we're going to be in deficit this year. It's a pretty modest deficit because we have very modest growth expectations. Okay, and those deficits build next year. We've got about 200,000 tons of deficits next year, and about 300,000 tons in 2026. And that is, and then deficits out beyond that towards the end of the decade. Okay, so modest deficits this year, 200,000 tons next year, 300,000 tons the year after that. Those relatively modest deficits are enough to wipe out all of the visible inventories that we have for copper. So, the Shanghai, the Shiffy, okay, the LME in London, COMEX, bonded warehouses, and so on. We're talking about wiping these inventories out, a complete stock out situation by the end of 2026. And that is with very, very modest global growth assumptions. That is not a scenario where we're talking about a synchronized kind of resurgence of global growth, where we get coordination between China, the EU, and the US and a big rebound in global growth. We're talking about very modest underlying assumptions, and we're still getting to a situation where we're wiping out those inventories. Okay, there's a couple other things. I was talking to Dan, having a really interesting conversation before this presentation started about just the build out in the grid. So separate and aside from the secular demand trends that we see in, energy transition areas. So this is, you're talking about EVs, you're talking about renewables. These are basically China stories, EU stories, and to a much lesser extent, the US. So don't get caught up about what's happening in the US. It's really a China story there and a Europe story. But separate and aside from that, in the kind of, you think about, the copper demand for the power grid. In the United States, you've had over the last 5 years zero growth in the power grid. Okay, zero growth over the last 5 years in the power grid in the United States. Zero demand growth for copper in the United States. Traditionally, if you look over a longer period of time, the power grid would grow in the United States between 2 and 3%. It's a little bit less than 2.5% on average. If you get even a return to that level of growth, you're talking about major incremental demand. On a global basis, non-energy transition growth would be at a similar sort of level between 2 and 3%. If you get even 1%, demand growth in the traditional end use areas on a global basis, that gives you another 500,000 ton swing towards greater deficits. Okay, so just think about that. We're already talking about being out of copper in inventory by the end of 2026. If you get even 1% growth, from an economic rebound or build outs in grids or whatever outside of that energy transition complex, you're talking about just a really dramatic security of supply panic that's going to be upon us in a couple of years in the copper market. Okay, so this is what you need to be thinking about when you get outside of the noise of kind of these recent movements, big up move earlier this year, and then a big 50% retracement of the move, 20% correction that we've seen just recently. This is what you need to be thinking about in terms of the backdrop. And this correction that we've seen, it's basically a positioning cleanse, okay, within a secular bull market. And these kinds of corrections are healthy within a secular bull market, which is what we have. You had positioning that had reached historic highs, like absolutely the highest levels of spec positioning that we've seen on the long side in the copper market. And so this is basically an unwind, a positioning cleanse, and a drawdown in the copper price, which is consistent with a secular bull market. And this represents a tremendous opportunity. I think, for as an entry point into this secular bull market, which is a longer term trend, but even on the shorter run, if you think there's basically now 100% consensus or near 100% consensus around rate cuts coming through in the fall. And obviously when you think about, commodities, you think about rate cuts on the horizon, you're looking at gold and silver, but think about this fundamental backdrop. Think about what you saw over the beginning of the year, where you had, non-traditional investors, global macro investors supported by quantitative investors, momentum investors, machine investors, and what they did to the copper price. You're going to see a major move in a rate cutting environment play out in copper again, given this fundamental tightness that we have in the market. It's just right for another move like we've seen. Okay, so a great entry point in terms of copper. And let me speak just very briefly in terms of the supply side and to some recent news that we've seen. This helps frame this medium and longer term bullish outlook that we have, because one of the other key components around this view is that we're not going to get a major supply response, and it's not for a lack of want. Everyone wants more copper. The diversified majors, which have made all of their money in iron ore, representing $500 billion of global market cap. They're all talking about rebalancing towards, future-facing metals like copper. Gold companies, you've got another $100 billion of market cap of gold companies that are all talking about adding copper. Chinese companies, these are the biggest players in the commodity markets. They are desperate to be, and they're desperate to be adding copper. They're suffering from a lack of opportunities at the short run. Even sovereign wealth funds, we've seen Middle Eastern sovereign wealth funds, which have enormous amounts of cash that they've generated from the oil sector and trying to rebalance, even small portions of that into the copper market have a major impact. Okay, and yet we don't see major investment coming through. Why? Why don't we see all this investment in copper? Okay, the problem is that the major projects out there, the biggest, the meaningful movers of copper supply, Dan alluded to this in his introduction. It's these big copper porphyry projects in Latin America. The vast majority of them in the high Andes. These collectively represent about 40% of supply. They just can't be built economically because of the inflation that we've seen on the cost side. Okay, so we've got consensus prices now between $3.75 and $4 copper. The capex is just too high for anyone to commit to building these big projects. Capex for Chilean projects, Chile's the #1 producer. Chile's double the size of Saudi Arabia in copper as Saudi is to oil. Capex there is over $30,000 a ton now and headed higher. Peru is $25,000 a ton. These kinds of capex intensities, you need $5 to $6 copper. You may have seen, if you've been following copper, you may have seen Freeport with their Q2 results in the conference call. They talked about their El Abra. This is one of their big expansion projects, El Abra in Chile. It's already a huge mine. All they're talking about is building a mill. So that's just a small piece of an overall mining complex. If you're thinking about like a greenfield opportunity, just putting in a mill for that project, they're saying it's going to cost them, $7.5 billion, and it's going to take 6 years to bring in that one small piece of, what a greenfield development would entail. $7.5 billion. Going back a couple of days, you had Teck Resources. This is the biggest Canadian mining company, report, and they built a major copper mine in Chile recently for it came in at over $9 billion. Okay, and they're still suffering from underperformance and cost overruns there that are coming through. So this gives you an idea of just how challenging it is to be bringing in, big copper projects. Okay, and this brings us to Solaris, because one of the special aspects of Solaris is that we're outside of the high Andes. So we have the big scale copper project, but it's at low elevation. It's in a country called Ecuador, which is at low elevation and it has excellent infrastructure, and it's just a low cost environment. And so the capex intensity that we see in Ecuador is about 1/3 of what it is in Chile. It's about half of what we see in Peru. And this is really the opportunity in Ecuador, where you can get outside of that paradox of wanting to bring on copper but not being able to do it economically because of costs. In Ecuador, you can actually bring these projects on economically at large scale. And that's really that's one of the key aspects of Solaris. Okay, so I'll leave it there on copper. Solaris now, this is obviously it's a copper growth story. We do have a portfolio of assets in the Americas, and there's real locked up value in that portfolio. We get asked all the time from industry players and investors about the asset that we have in Mexico. There's a lot of attention around that asset. We think that it's a great asset, and we've got plans to surface the value from that in a spin out rather than to sell it on the cheap before we've really had a chance to reframe the proposition there. But so there's a lot of locked up value in this portfolio, but we're very much focused on our Warintza project. This is our flagship project in Ecuador. It's a very special project because what it does is it combines global scale. So that meaningful kind of scale and size that the largest companies in the sector are kind of looking for. But then it does it with a robust economic opportunity. And that economic opportunity is a function of a couple of things here. First of all, a high grade component. So you see the resource that we have there, 0.9 billion tons in the measured and indicated categories, 1.4 billion tons in the inferred category. A lot of our retail investors, they ask us about a total inventory. If you were to do, that's not how we can report, but if you were to sum those numbers, you're talking about 2.3 billion tons total resources here. The biggest projects to go into production this cycle would be projects like Teck Resources QB2 project in Chile. That's the project I was telling you about, over $9 billion to build that. That has reserves of 1.4 billion tons, for reference. So this is a big resource. What's special about it is that you've got a high grade component right at surface. Okay, this is your supergene mineralization. And then together with that supergene, you've got high grade hypogene mineralization, which forms a high grade subset. We set this out in the sensitivity of our resource estimate. And there you've got, again, if you're to add these resources to give a resource inventory, which is what our retail investors ask us about all the time, you've got about 600 million tons in the measured and indicated and inferred categories there at a grade of about 0.7%. So that's about 50% or nearly 50% higher grade than the overall resource. And that higher grade mineralization, that gives you an opportunity over the first decade of your mine life to be mining higher grades, generating more revenue, more cash flow, paying back your capital more quickly. And that's what gets you a higher net asset value and a higher internal rate of return. So that's a key part, that higher grade mineralization at surface and near surface of the economic opportunity. And the other part of it is just the low capex opportunity that you have in Ecuador. Now, we haven't published economics, to be clear, for our project yet. That's coming in 2025. But if you just look at Ecuador generally, you see that this is, and you look at some of the other developments in this country, you see that this is a country that's at low elevation. It's got excellent infrastructure. And you see global scale copper mines to the south of us that are being built at a third of the cost that they are in Chile, half the cost of Peru. This is the other piece of it. And so it's those two things that come together that create a very special opportunity in terms of the economics of the project. It gets you outside of that paradox of, wanting to build copper projects, but not having the economics to support it. Okay, so that's what Warintza is. That's how it's differentiated. That's what's special about this asset. Now, Solaris, we're funded. We've got all the funding that we need to deliver on our growth and de-risking strategy for Warintza. This is a streamlined kind of strategy here with financing that we put in place over the last period of months here. So we're funded through 2024, 2025 into 2026. We're going to have a larger and completely de-risked project through a pre-feasibility study and permitting over that period. And we're funded for all of that work, and I'm going to tell you about it. Okay, and then what we've done is we've put in place some key de-risking around this in terms of an agreement with the government of Ecuador to freeze the taxes in place over the life of the mine and the asset, freeze the regulatory environment in place. We're coming into elections in Ecuador next year. No matter what government comes in, and there's consensus around the idea that it's actually going to be the same government that we have, which is good. But we're protected in terms of any regulatory changes as well. And then we've done the same de-risking in terms of the social license for the project with an impact and benefits agreement with our communities, which host the project. These are the parties that are relevant to the permitting process. And then we've added to that in layers with the mayors of the nearby municipalities, the governor of our province, and then the national level government, and both in the formal government and in the indigenous government structures in the country to provide the social license for this project. Okay, so that's Solaris in our Warintza project at a high level. This is a company that is part of the Augusta Group, and this is a specialist management group, obviously, focused on the mining sector, but then with a particular expertise and niche in world-class exploration and development projects. So pre-production projects is really where our expertise is. And this is our track record over the last dozen years. You've got, $4.5 billion of exit transactions. And it's the same strategy every time. Different assets, different jurisdictions, different commodities. The same strategy and the same broad contours with each of these. We get a hold of an asset that's got world-class potential, and people bring us these assets because of the track record and the capacity that we have. We get a hold of an asset that's got world-class potential. We surface that potential. We de-risk that potential, and then we look to transact the asset, to reposition it with a company that wants to take it through construction and into production, which is their niche. That's the niche of the global major. They've basically given up on the idea of, for the most part, of going out and finding these things, and they've left it to specialist groups like Augusta to do so. Now, the one thing I'll say that could differentiate the path forward for Solaris is we just are nowhere near a valuation where it would make sense for us to actually sell this asset. Okay, so obviously there's potential that can change in the future, and we're working to do that, but we're nowhere near a kind of evaluation where it would make sense to sell. So, there are other possibilities here around a joint venture and bringing in a senior partner to actually put up the capital to build the asset and continuing on with a smaller stake into a producing asset. Those are all things for the future. The immediate focus for us right now is just on that growth and that de-risking opportunity that we have with the asset that we're focused on. Okay, just moving on and looking at the balance sheet here. This is a company, it's about a $400 million company. Decent liquidity on the TSX, building liquidity in the US. We're really focused on the US. The Canadian market and the Canadian investment environment in general is in a long-term decline and in a very, very difficult spot. We've elected that we're going to grow into the US. And so we've added a NYSE listing in April. We picked up some recent US sell-side equity research coverage recently. We're hoping that we get more coverage, more research coverage coming through. And I think we could see some additional coverage in the near term, and then hopefully with some of the bigger firms over the balance of the year to really expand that knowledge base around the company in the U.S. market. And that's absolutely a focus of our marketing efforts as well, both with retail and with institutions, to try and get ourselves out of a very difficult environment in Canada for a whole variety of reasons, politics, regulations, and just declining, markets and a difficult economy and so on, and into a much healthier environment in the U.S. So that's very much the orientation of this company, for the future. Okay. And in terms of the funding that we have, we've got about $100 million US of funding between the cash that we have on the balance sheet and then the remaining drawdowns on the offtake facility that we have. Okay, so that's about $100 million US of funding. If you look at our financials across Q1, we spent about, net, we spent about, $10 million in that quarter. So it gives you an idea of kind of how we're positioned in terms of a burn rate. I'm not telling you that the spending is going to be flatlined, but it gives you kind of a rough idea of kind of how we're positioned. And so that's basically the funding we need for 24, the funding we need for 25, and then completing our growth and de-risking program in 2026 with a fully permitted asset that's available for opportunities around transactions, whether we've got the valuation to support a sale or whether we're looking at joint ventures or mergers or things like that at that time. That's all still to be determined, but we've got the funding in place to go ahead and do that. Okay, in terms of our shareholder base, the biggest shareholders here by far are just the management team. And so the management team, we've invested over $200 million Canadian of cash to get to the position that we have. You see that this is a buy-in all the way up and down the corporate ladder. So it's not just our executive chairman, but it's myself and it's everyone on down the line has been making purchases to add to their positions in this company and take advantage of the kind of the recent pullback in the share price here, including into 2024, where you see continued buying and insider investments in this company. And that's something that's going to continue into the future. Okay, just moving on, and I'll spend some time briefly talking about Ecuador. This is a new jurisdiction for mining. You got about a decade of mining history. There's support for the mining sector across the political spectrum. So all the parties, the Socialist Party that opened up the mining sector through, we had a hard right conservative government, deeply unpopular recently, and that gave way to a centrist government, which we have now. They all support the growth in the mining sector. You see the president, the new president, Daniel Noboa, at the top of the image there. That's when I met him in New York. He was actually educated in the United States. He comes from a wealthy business family, but educated in the United States. He's Western aligned. He's business minded. And that was the meeting that I had with him in November. The gentleman that you see below, that's the governor of the province that we're located in, Vicencio Condor, Sixto Condor. And he's actually the father of one of the employees of our project. So this is a great government that we have in Ecuador for the mining sector. The mines in this country are absolutely thriving. Okay, they are thriving. So you see headlines in this country about security issues flaring up around the end of the year. There's zero impact on the mining sector. Where we're located in the southeast of the country, you've seen no impact from security issues. And those security issues have been bottled back up. Those are basically issues along the border with Colombia and on the coast. And those have been bottled back up by this powerful new government that we have in place. The mining sector is thriving in this country because of the support from the government, because you've got this excellent infrastructure, because you've got low costs, and because you've got amazing assets in this country. And so really what it's about is bringing that next wave of development. We're right at the forefront of that with our project, and we're doing it in a region where you have mining. It's within a mining district where you've got support and understanding of the benefits of mining development, and you've got an appetite for more of the same. Okay, just moving on here and taking a look at these are some of the supporters that we have at various levels of, from the bottom of that image, you see at the community level. So our project is hosted by 2 Indigenous communities. You see their leadership there vouching for the project. They're parties to an impact and benefits agreement supporting the development of this project. That's rock solid. The land status is crystal clear here. The legal framework is crystal clear, well established. And the permitting contribution from these parties is proven. So we've come through an environmental impact assessment. We've come through a community consultation. We've been awarded an environmental license where we've taken advantage in putting in all kinds of infrastructure. We're going to be repeating that process again. We're going to file our environmental impact assessment for the development of the mine in Q3 here. And it's going to be a rerun of the same process of working through the permitting of that phase of the project that we've seen previously. Then you see the local municipality, the mayor of Limon. He's a strong supporter. We've managed to get 86% of our spending through local economies and supply chains. This is how you win support of the business community and some important political actors that depend on the health of the economy in the local region. You saw the governor. You got the same thing happening at the national level in terms of the support around this project. Okay, just looking at the district in a bit more detail, you see basically everything that you would want to build a mining project. So we're at very low elevation here. This elevation is lower than Mexico City. If you've been down to Mexico City, it's very low by global copper mining standards. Okay, and this is a big advantage just on its own. But then you see the infrastructure, the highways that run up and down the belt, they connect out to the Pacific ports. The Pacific ports are well serviced by 4 different bulk ports in Ecuador. This is an export economy after all. Formal part of the economy, 80% of it is oriented around exports. And you've got all that infrastructure there to support it, which you can take advantage of with these mining projects. Power grid in the country, stable, low-cost power. It's actually a growth sector. They're adding hydroelectric power. The biggest project in the country is the one that you see actually bordering our claims there, Santiago. This is a permitted project that's going to be in construction. According to the president, he announced this at the PDAC mining conference earlier this year. That's going to be in construction in the next 2 to 3 years, right on the boundary of our mining claims there, which will be adding a huge amount of power directly into the grid. Okay, so this is a growth area in the country. You've got abundant fresh water. Fresh water on its own is $1.5 billion ticket if you're building a project in Chile, like Tech Resources with their QB2 project. You know, $9 billion there, $1.5 billion is just for the water solution. Okay, and then you've got abundant mining labor. You know, we're using just basic kind of labor for, you know, what'll be an open pit operation here. And you've got US dollar currency, so you're not messing around with you know, a currency that's depreciating by 100% every year. The way it is in some of these other Latin American countries, you've got a US dollar economy here, and a bunch of other factors that kind of come together to give you this very low cost environment. And you see that in the cost that it takes to build in this district, where the comparable for, you know, for copper projects, open pit copper projects, is the Mirador mine down to the south of us. And you see that project coming in, you know, and when you adjust on an apples to apples basis for scale and other factors, it's coming in at about half the cost of Peru, which is the world's #2 producer, and about 1/3 of the cost of Chile, which is the world's #1 producer. We put in a comparable for the United States. They're basically very few large scale projects in the United States. Suffice to say, you know, the United States for a greenfield project would be even more expensive. The Baghdad mine that we show there, that's for an expansion. That's just a pure brownfield. But it gives you an idea of just how much cheaper Ecuador is versus other jurisdictions. Okay, and I'll just touch on it very briefly here because we're running a bit long, but this is a major constraint. When we talk about these capital costs, it's not just because it's an advantage, it's also because it locks in this supply shortfall that we're going to have in the industry. So basically, if you have a project that's above $20,000 a ton, you can't make that project economic at anything less than a $4 copper price. So you're waiting around for the copper price that we're going to have, I think, probably in the back half of this year, but certainly in 25, I think everyone expects that we're going to have a much higher copper price, and certainly beyond that. You're waiting around for those prices before you can greenlight a project. Okay, and if you've got a project in Chile, then you're waiting around even longer. If you're in the United States, you know, you're waiting even longer than that until you get up into the $6 kind of copper prices to greenlight a project. And that's exactly why, at a time of consensus bullish outlook for copper, you've got less than half of the capital spending, you know, allocated to additional supply coming on that we did at the peak of kind of the last market. Okay, where we got about $30 billion versus $60 billion at a time when we need to be not just $60 billion, but $100 billion and going higher. This is the snapshot of a structural shortage of copper in the making here, which is coming over the back half of this decade and beyond. Okay, just moving on. This is the resource that we just recently published. You see 900 million tons in the measured and indicated categories. We're going to be looking to grow that figure. We've got another over 30 kilometers of drilling that we're going to do on the back half of this year, looking to grow that figure, and then going on with additional drilling into 2025. And then inferred, over 1.4 billion tons in the inferred category. You see a slightly lower grade. That's what happens there. We've got a kind of a modeling approach that discounts. If you've got wider space drilling, it discounts the grade between those drill holes. And as we improve the drilling, we're certainly hoping that we can pick back up the grade. But we're going to be adding a significant amount of drilling, looking to grow this resource, improve the confidence of the resource, and hopefully in that inferred category, pick up some of the grade as well. And let's just look at how that fits in on the next slide into a district opportunity. So you see our claims in the bold. You see new claims that we added in a deal with the government in the dashed outline. I'll come to those in a moment. Those are an important part of the longer term growth profile here. The inset image on the right, this is looking at some of the geochemistry and the obvious growth opportunities. Remember, these deposits are outcropping at surface. So geochemistry isn't some, you know, kind of indirect method of plotting out where there are growth opportunities. You're literally looking at the copper mineralization here. And so you can see those areas that we've circled. Those are the immediate vectors to grow this resource, and add to that resource or inventory. So there's a great deal of growth potential in the kind of the near mine. It sits within a district where you've got consolidation opportunities and so on, and specifically to the west of our project, so to the left of our kind of core claims there, you see there's another project called St. Carlos and Panatza, and it's sitting there with over 1 billion tons of resources of its own. And so if you're a major mining company, if you're one of the Western mining companies, and you listen to the way that they talk about acquisition opportunities and growth opportunities, they're always talking about districts, they're talking about basins, they're talking about belts. They're not talking about individual projects. They want to put together multiple individual projects, and they want to do it where they've got, a supportive framework in terms of the infrastructure and so on, so that they can build these projects quickly and at a cheap cost. That is the picture of what you're looking at right here. And we've had a lot of interest. Ecuador is a great country for Chinese companies. We've publicly disclosed last year that we've had offers from Chinese companies. We had an investment, a major investment that we announced earlier this year from the fastest growing and the largest of all of the Chinese mining companies, which is called Zijin Mining. They wanted to put $100 million into our business to support the growth and the de-risking strategy that we had. That transaction we had to walk away from in May of this year. We couldn't get that done under the Canadian regulatory environment in a reasonable amount of time, and the market had evolved in a way where it was no longer attractive for us. And what we said at that time is that we're going to pursue strategic flexibility in the future. And so I'm going to leave it there on that front. That's something for the future to keep an eye on. But there's a lot of Chinese interest that's been demonstrated very, very, very clearly. But then the Western interest that you have here, I think should also be clear in terms of the district opportunity that you have and the opportunity to put together one of the best copper, greenfield development opportunities in the entire industry in a jurisdiction that's absolutely desperate for exactly this type of investment. Okay, and then just looking at the larger opportunity, these are some of the higher impact type exploration opportunities here. So this is moving away from the kind of the core resource, the growth opportunity and the de-risking opportunity there, and looking at what else we can do on this property package. And so we've got a parallel program. This is running right now. So this isn't the future, but running right now, concurrently with the growth of the resource opportunity. You've got an exploration program. And this is aided by the government, who's trying to help us consolidate this district. They awarded us a package of new claims where we've got an option that you see in the blue. And we've got targets here that are just screaming at us to be drilled. So in the image on the left, you're looking at the porphyry targets where you've got the same signature as the Warintza project coming through in the geophysics. That's the EM that you're looking at of what Warintza looks like. And then you see at Media Camino, you see at Curucus, you see at a target we call Norte, the same kind of signature. None of those targets have been drilled. We've got to come through. Those are all screaming out for, drilling and potential discoveries in the future. The same thing at our Tinky target. We're looking now at Mag, where you've got a beautiful mag signature of a horseshoe around Warintza, enclosing a magnetic flow. You got the same thing duplicated on the Tinky target. We've got field crews on top of this right now, adding to the geochemistry that we already have there to help better define that target for drilling. These are targets here. When I'm talking about district exploration, we're already drilling, and we're going to be continuing to drill and work through these targets, which are potentially high impact discovery type targets over the course of the year. Okay, and on the right side, you see epithermal, and this is something that's totally new. We've always been thought of as a copper porphyry company. We're also looking at epithermal gold silver deposits because that potential naturally goes along with the porphyries. We've just never done the exploration until very recently, where we've got a dedicated epithermal program out. This is out to the east of our Warintza copper porphyries. And we're already turning up results that I think validate this concept. And so in the inset image there, that's an actual grab sample that came out of the field recently, where it's very high. This is without a shadow of a doubt, this is intermediate sulfidation, epithermal mineralization, extraordinary values of silver, like literally, visual native silver within that deposit you can see with your naked eye. The assays that came through for that were over 1% silver. That's like 10,000 grams per ton of silver. You had some gold that goes along with it. We've had crews in the field working on this as intently as you'd imagine. We'll have an update out soon on what we've found in terms of the additional sampling that we've done in this area and mapping in this area. But this is shaping up to be a very exciting target. And if we can make a high-grade gold-silver discovery, well, that's an absolute game changer for the project. And it just adds to the appeal and broadens the interest of this overall development opportunity that's shaping up here at Warintza. So keep tuned to the epithermal potential. We'll have an update out in this area soon. Okay, so let me just wrap it up here because we're running long. But in terms of the timeline, just think about this in two parts. So again, that core opportunity at Warintza. Okay, we're basically we've already got a large resource with a high-grade component at surface and at the core of it that we've set out, which represents a really robust potential development opportunity. We're going to be continuing to grow that. We've got a large drilling program over the back half of the year that'll continue into 2025. We'll update those resources again, and then we'll wrap economics around it, define reserves for the first time with a pre-feasibility study, and then we'll enter into an exploitation agreement with the government on the back of that pre-feasibility study. We've already started the pre-talks with the government at this stage. They're very keen. And then the permitting process. So we're filing our environmental impact assessment this quarter. And then that permitting process in Ecuador is anywhere from 1 to 2 years based on the kind of the experiences of other projects in the country. We'll be hoping to wrap that up in early 2026. So that's the core opportunity and the trajectory for that. And then remember, we've got this high impact discovery exploration program going, both aimed at copper, porphyries, and epithermal gold silver projects that's running concurrently. And we're already drilling on that. We're going to be drilling through the back half of the year. Stay tuned for the updates that are going to come through. We're all very excited about that here at Solaris in those programs. Okay, and so that's the outlook for Solaris. We're trading at a heavily discounted valuation, and we're trying to rebuild our shareholder base in the United States in a more attractive market. And there's a large opportunity here when you compare to what assets have actually traded hands for. Again, the Chinese are the most aggressive buyers out there in the space, but by no means are they the only ones. And you're looking at development stage assets, pre-production stage assets that are trading hands at 0.8 times net asset value. That's something like 4x from where we're trading. And obviously for the producers, they're trading at a big premium to that as well. So that's attractive for them. The job that we have to do is rebuild that shareholder base in the US market, get ourselves to a better valuation. If we're successful in doing that, then we'll have a range of options that are available to us. Remember, we're going to be pursuing strategic flexibility so that we have the widest range of options available to us. But this would, given the valuation, include everything from a joint venture to a sale and everything in between on the core development opportunity, and then preserving that value in the rest of the portfolio for our shareholders in the form of a spin out of the rest of the assets into what will be at the time, I'm sure, a stronger copper market environment. Okay, so that's Solaris. That's the outlook. I'll leave it there. And we've run a little bit long, so I apologize for that. But if we have time for any questions, I'll certainly try and take those as well.
Yeah, good job, Daniel. Good story. Hey, I just want to tell everybody before we get into some Q&A, because I got 4 or 5 questions here that were sent to me by email. But I was at a conference. I spoke at a conference yesterday in Boston, and I had a chance to sit down with the CEO of U.S. Energy Development, which is a very large private company. And during his presentation, he discussed this, AI build out, the amount of electricity is going to be needed. And it was discussed a lot, even on the breaks, people were asking me about it. the amount of electricity, it's going to increase the electricity demand in the U.S. by 30%. Well, number one, the grid needs to be improved and built out to support that. And you're going to need a heck of a lot more natural gas-fired power plants, nuclear power plant, and all of that requires copper. There's no substitute for copper. And so I think when I look at this, it's just like, if you can look past this year, after this year, and because, look at how many trillions of dollars have been invested in these AI stocks. I mean, they're just trading at perfection. And there's no way that these AI companies can really, build out their business unless they have these big data centers, and it's just going to happen. There's so much money there that it's going to just force the companies to build more power generation. So anyway, I think that's the underlying story here. And this is good. I mean, if they've got their funding here through 2026, mid 2026, by that time, they should have gotten the economic evaluations on this to make this a very viable project, which it looks like it is today even. But anyway, I'll get into the questions here, and let's say here's one that if the Warintza project is sold to a large mining company for development, will Solaris then retain the other exploration projects in Ecuador?
Yeah, look, it's a great question. And so we got a portfolio with assets in Mexico. That's in a joint venture with Tech Resources. We think that's a great opportunity. We've had a lot of inbound interest on that. We are not looking to dispense of that on the cheap before we've had a chance to kind of rework that asset. So we're holding on to that. And then we've got assets in Peru. We've got assets in Chile as well. And what we've said is that all of those assets, we're going to preserve the value opportunity there for our shareholders. So when we have a transaction for Warintza, what we're going to look to do is package that plus whatever else we have available to us in Ecuador, package that up in a spin-out company, and then spin out 100% of that to our shareholders. So
okay, wait, can you go back to slide 12 for a minute? Like 12, there's a question that came up when I was looking at that. Okay, when you look at where it says Warintza cluster, and those green dots are other targets, do you anticipate selling everything within the boundary of Warintza cluster at one time, or would those green dots be spun out into the new company?
Well, look, if there's an opportunity to retain any of those targets, any of the new claims that we've added with the government, which hosts some great targets of their own, then we're going to look to do that. It's premature to talk about the specifics of it at this stage. But look,
right.
we're the largest shareholders. We own over 40% of the business. We've put in over $200 million Canadian into this business. We are hyper conscious of shareholder value. So if there's any way out of a transaction that we can retain a value opportunity for the future, and we do take a long-term horizon of these things, we're happy to do the work to surface that value in a next leg, in a successor here. We're going to do that.
Yeah. Well, the second question I have is Warintza sale ready? And well, everything's for sale at a price, but not at anything close to your current stock valuation, is what I heard in your presentation.
Yeah. Look, we're not selling at the bottom. So we've had offers already. We disclosed that last year from Chinese companies, and we're not interested in selling at the bottom. So we've got a program in place where we're going to be taking this through its next leg. We're going to de-risk it so it's open to broader appeal here and a more valuable asset over the next couple of years. We're fully funded for that. And then we're going to look at the real game changers, which would be if we can add additional discoveries around this, either in copper or in gold. And then we're going to be pursuing strategic flexibility, so we've got the widest possible audience for it. This is how you set up a transaction, which is the best possible transaction in circumstances for your shareholders. And we're happy to do that over the next couple of years for our shareholders.
Yeah. So first you get this to an economic feasibility study where so okay, here's what is available. Here Warintza, this is what's available. But we have this other stuff. So you can make us an offer just for Warintza. You can have just everything in the Warintza cluster, but here's other things. But we're only really interested at this point in looking at an offer for the Warintza pit mine, the one you're really focused on. I would think that would be the way to go, and then spin out the other stuff, because you don't want to give it away if you think it's got all kind of exploration upside.
Well, we're not, rest assured, we're not giving anything away.
Yeah, I agree. Hey, yeah, and you got the funding, you got the funding to stick it out to do it.
Exactly.
So when you get it, what's done to attract buyers? I guess you're just out there and people know about you, like you said. So, at any point in time, somebody could come to you and just say they're interested in really looking at a deal, right?
Well, look, we have approaches all the time of companies that want to, get engaged and, have discussions and so on. Look, it's not in the cards. We're nowhere near evaluation.
Right.
At the moment, we've got a strategy in place where we can get to that point, but we're just not there right now. What I will tell you is that we are interested in the further afield exploration opportunities. And because of the high cost of capital that we have with the heavily discounted valuation, it doesn't make sense for us to go and fund those on our own. Okay, because we're very conscious around shareholder dilution. So those further afield opportunities, so not what you're looking at here on this page, but the opportunity beyond that in this belt, where this is an incredibly prolific belt. Just think about the history here. We started in 2019 with one discovery. We've now got 6 of them. And we're working on adding discoveries in both copper and gold around that. We go into the field with an epithermal program this year, and we pull out a sample that's grading 11,000 grams silver. Okay, this is what an incredibly prolific district, which is untapped, looks like it can give you. And so there's a big opportunity beyond what we see there. That further afield exploration, let's call that regional exploration, that we are willing to deal on. Okay, so that is something that where we are having discussions with Western majors about their interest in putting together an exploration joint venture on that. So that's something that you could see maybe in the short term. I'm not guaranteeing anything, but I'm telling you that is something. If you're looking for something to happen in the short term, especially with Western companies, that's the kind of thing that could happen.
Yeah. Oh, yeah. If you come up with some gold, look at gold prices. You come up with some, significant gold project and silver project. That's going to draw a lot of different people to look at the company too. So I think that's cool.
Exactly. And look, I like gold, but I'm even more bullish on silver.
Yeah. Well, and then copper is not, okay, gold for jewelry and whatever, or a hedge against inflation. Yeah. But the thing is with copper is we're talking about, we must have more copper to build out all the stuff that people are talking about for AI. It just won't happen without a lot more copper. The one thing that always comes up to a question I get, they say, well, I put up a long-term, 20-year chart of the oil price, and somebody will say, well, what's the key? What happens if oil goes down to 25 or 30 like it did, a few years ago or something with the pandemic? And I said, here's the deal. The age of cheap oil is over. And like you said, the age of cheap copper that's right near the surface and everything, it's really over. There isn't enough. So the existing mining companies are going to have to go deeper and deeper, which means more capex. So you've got to have a higher copper price to support them going after those more expensive reserves, correct?
Yeah, absolutely. Look, just listen to what the companies are saying. Everyone is bullish copper, like hyper.
Yeah, everyone.
How much money are you actually seeing spent on copper growth? It's half of what we saw in the prior cycle. And that's exactly because of that issue of the cost inflation that you talked about. Freeport literally 2 days ago just put out another data point for everyone to look at in this industry, $7.5 billion to add a mill to an existing large scale mine where you've got all the infrastructure and everything else. $7.5 billion. Like, how many companies are out there are willing to commit to $7.5 billion of spending for an expansion, or let's say $10+ billion for a greenfield project in the Indies? That's the issue right there. And like you said, on copper, you need to have it. There's no substitute.
There's no substitute. That's the thing.
You can use a little bit less copper. That's already baked into the numbers, kind of at the margins. But there is no substitute.
It's the same thing. We're seeing with oil and gas. you can wish and hope and throw fairy dust at it, but there's no substitute for the energy that we get from oil, gas, and coal. I mean, we're stuck with fossil fuels just because we're stuck with them. I mean, that's just the way it is. So anyway, I'll get some of the other questions here. Okay, Dan, two questions. First, I am worried about FICSH and CONAIE releasing statements accusing Solaris of being involved with the police or something. Second, which companies are prime candidates for JVs or acquisitions? Appreciated. Okay, I don't know what that means. The statements thing.
Well, look, let me deal. So I think generally what he's talking about is NGOs, and so you have anti-mining environmentalist NGOs,
Okay.
both Canadian, American, and Ecuadorian that are active, and they're very noisy in Ecuador. And what they do is they try and they kind of align themselves with bad actors within the indigenous movement to try and represent that the indigenous movement is against mining.
Okay.
And so they put out these statements. It's part of their like fundraising activities and so on, where they go out and make statements accusing the mining industry of all kinds of environmental destruction and human rights and all this kind of stuff. Look at what the communities themselves are actually saying. So our project resides on the ancestral lands of two communities, the Warrants and the Yout. They're members of the impact and benefits agreement that we have. They strongly come out and support the project at literally every opportunity. Okay, and then beyond that, you've got neighboring communities that are working with us. You've got the official indigenous kind of association that was created by the Ministry of Social Welfare in Ecuador that represents these Shuar indigenous people, this lowland Indian population of people, which is called FICSH. And we announced an agreement with them earlier this year where they're supporting the development project. Now, you're still going to have NGOs, and you will always have NGOs that come out and say, no, actually FICSH is against the project, or the communities are against the project, right. And so there is nothing that you can do to change that, except keep doing a good job, keep winning out and expanding the social license that you have in the communities by doing good work on social programs, which we're doing with in all areas, from education to health to infrastructure development to job training and supporting cultural activities and so on. So look, you have to be able to understand NGOs, and you've got to be able to separate noise from reality, or you're just not an investor that's prepared for the mining sector in Latin America. But that's just the straight reality of it.
Yeah, I think you've answered. As the next question, it was kind of based on that. Was there protest against building a mine? Well, I mean, there's always going to be there's in the U.S. there's protesters against fracking, against drilling wells in New York or something. I mean, you're just always going to have it. But when you absolutely have to have copper, you absolutely have to have oil and gas, it's going to be done somewhere, and it helps the local communities. I mean, if it wasn't for oil and gas in West Texas, there'd be nobody living there.
You have again, I don't want to go into a whole bunch of detail, but you have NGOs try and organize these protests every year. Okay. And so the supposedly national protest that they had last year, they turned out 2,000 people in the whole country. This is a population of 18 million people. Okay. In the provincial capitals, 0 people, 0 turned out in our province. 0 people turned out in the province to the south of us. Why? Because these provinces are benefiting massively. The areas around the mining projects in the province to the south of us, in Zamora Chinchipe, they went from being the poorest part of the country to these cantons now are even wealthier than the national capital and the business capital in Ecuador. That is a wholesale change. That is a stark contrast within 1 decade of improvement with development. Okay, and what are NGOs offering? They're offering nothing. They're offering no development. It's like a nihilist outlook. Let's have no economic growth. Let's have no development activity. Let's have no infrastructure. Let's have no government services. That's not something anyone supports outside of San Francisco and Seattle and on the internet. Like people on the ground who are actually experiencing abject poverty, they want jobs, they want development. And that's true, not just in the mining sector in Ecuador, but that's generally true in resource sectors in developing countries across the globe.
Yeah. As I say in my presentation, energy is life. Energy is high standard of living. Without it, can't. So in order to have access, we talk about India's build out of their grid and stuff, before we got on here, it is without that, without the copper, without the power plants and everything, there's no way you improve the standard of living of the people. So these native people, unless they just want to live in poverty forever and their families live in poverty, they're going to support what you're doing because it's the way you're going to get jobs into that region. So anyway,
and again, listen to them. Like actually,
listen to them.
Don't listen to an NGO. Listen to the people who actually live on like whose land it is. They're the ones that you need to listen to, and they're the strongest supporters of this project. Why? Because they benefit from the project.
Yeah. Well, I think we need to end it there, but I will just say what I'm heard today is you're funded through mid-2026. By then you should have, an economic study out and also by then it's going to be crystal clear that this world is starving for copper. As you said, it's a supply demand situation and it looks pretty darn clear that there's going to be a shortage of supply coming very soon to this world. So anyway, Daniel, hey, thanks a lot for doing this. We did record it. Is going to be the recorded link to the recorded webinar will be sent out to all of our members this afternoon. And we do have a lot of members in Europe and Asia that were probably not on the call, and they always listen to these. So it will come out as a private YouTube thing for a couple of weeks, but we'll be sending you the link so you can send it to all of your contacts.
Fantastic. Well, thanks so much, Dan, for hosting, and thanks everyone on the line. Appreciate it. Appreciate the good questions that came through.